Hey everyone, welcome to High School Dropouts Advice. We actually have a lot to cover today. We will start with some Nio and Xpeng news. Then I want to talk a bit of the CEO of both companies and the relationship before I show you that Nio and Xpeng has a good potential to make you 1.6 million each year and teach you how you can use long-term investments to retire with 8 million per year with a portfolio size of 40 million. So there is a lot to cover in this video. Xpeng is currently trading for around $37 per share with a market cap of 26.7 billion. And Nio is trading for $43 per share, and Nio's market cap is at 67.6 billion. If we compare the price to sales ratio, Nio is the cheaper company. Nio trades for 22.61 times its yearly sales, and Xpeng is trading for 34.21 in sales. For people who don't understand this concept, let me quickly explain this with example. If there are 100 stocks and each stocks trade for $2, then the market cap is 200. If the company makes $40 in revenue per year, it's trading for 5 times its yearly revenue. So the higher the number, the more expensive the stock. Usually, when companies are not profitable, then people use price to sales to evaluate the company. Once companies become profitable, they use price to earning ratio to evaluate a company. So in this aspect, Nio is the cheaper option, but in my opinion, it does not really matter in the long term. I'm a long-term investor and I care more about how we end up with 1.6 million per year than just double or triple our money with a trade. I'm an investor, not a trader, so my views will be different. But before we move on to the news, I would like to ask you to give this video a like. It will help me and the YouTube algorithm. And please take your time to watch the whole video, even if you need to watch it several times, because I will teach you concepts of investing which should be an eye-opener for most of you. Let's try to move really quickly through the news because most of you are familiar with the news and I know you guys are bullish. So I want you to get the most out of the stock, which will transform your life in a big way. China bans Tesla cars from military facilities over spying fears. It also bans Chinese government employees and military personnel from driving a Tesla. Tesla has cameras in their vehicle which are taking pictures and recording pictures. It also has a phone book that saves phone numbers. I think this will not be a deal breaker for Tesla and the US. The US will treat Nio and Xpeng cars in the US the same way. But it's interesting to see that Nio and also Xpeng are getting supported from the Chinese government. It's not just by regulations, but also by investments. A Chinese province investments arm invests 76.9 million into Xpeng. This is not a large investment, but it's interesting to see that even the local government of provinces supports the Chinese brand. This shows the mindset of the government, but also its people. Let me show you a short clip. We see Xpeng making a driving expedition with the Xpeng P7 with its autonomous driving system NGP, which stands for Navigation Guided Pilot. The total distance will be 3,675 kilometers, which is 2,283 miles. It will be a 7-day tour and it will finish on the 26th of March. So when this tour goes well, we can expect the share to rise this week. Let me have a couple of words about the CEO of those two companies. He Xiaoping, the CEO of Xpeng, is like Elon Musk, already very successful before starting their EV manufacturing journey. He Xiaoping was already a billionaire when his Chinese mobile internet software UC Web got bought by Alibaba. He Xiaoping could retire as a billionaire but wanted Alibaba to produce EV cars. But Jack Ma disagreed, so He Xiaoping co-founded Xpeng Motors. He has a net worth of around 9.3 billion, and we can agree that many leading CEOs' motivation is not money related. In 2019, during Nio's toughest time, when Nio was facing bankruptcy, Xiaoping has invested a total of $300 million into Nio. This is something we should understand. Two competitors are fighting for market shares, but when one company struggles, the other is giving financial support. He could simply let Nio get bankrupt, but he understands that the world is big enough for both of them. You might also remember that Elon Musk was happy that Nio made it successful in their vehicles. All those CEOs want the EV revolution to be successful. It's not about a personal ego here. This is unlike many investors and traders who like to argue which company is better. Overall, all investors and traders should understand that we will make money with an upcoming revolution in the car industry and not because of a specific company. If we spread out investments, we will do quite well. The CEO of Nio, William Li, has a very similar career to He Xiaoping. William Li was the founder of BitAuto, which was sold, and then he started Nio. His net worth is 7.6 billion, and if you saw a documentary about him, he is a very humble person who sometimes sleeps in the office and sometimes takes public transportation to get to work. He even still lives with his wife in a very ordinary apartment. An interesting fact is that Nio staff are coming from 40 different countries, and they use simultaneous interpretation systems like the one in the UN. So he seems to be very modern, thinking and open-minded. I'm not sure if you guys know that the Chinese market is the largest one globally. It's bigger than the whole of Europe and the US, but it makes sense because of the population size. We have 1.4 billion Chinese, 747 million European, and 331 million Americans. China's car market is so big that the government limits the number of cars that can be sold each year. Many applications need to wait years to get a car license. This is how huge the market is. You know that big cities in China are very dense and the infrastructure needs time to handle the load of cars. So we have cities like Shanghai and other big cities which only allow an X amount of registration per year, even when they have residents who can afford and want a car. So you understand that the car sales market in China is enormous. Let's have a quick look at these projections. 1.9 million EVs will be sold in China in 2021. We can agree that Tesla, Nio and Xpeng's capacity to produce 1.9 million cars will be exhausted. The market is just too big, so this is why there is still room for other EV companies. Have a look at these projections. You see nearly 10 million EV cars in 2025. Building a gigafactory with a capacity of 500,000 vehicles per year takes 1.5 to 2 years. This means We need like 20 more gigafactories to cover the demand in 2025. Even Tesla, the market leader, would not build so many, and it's also not wise. The demand is just bigger than what one company can deliver, so there must be several companies. It's also impossible to conquer the whole market because there will be always people preferring other designs, brands and models. It will be like the old internal combustion vehicle revolution. We will have many car makers because the revolution and the market are too big for just one company to handle. So before I teach you how to make 1.6 million per year with an Nio or Xpeng investment, please subscribe to my channel when you think I deserve it. If you think I did not deserve it yet, then let me continue. In this part of the video, I want to talk shortly if you should trade Xpeng and Nio, or if you should invest in Xpeng and Nio. Trading means buying and selling them for higher profit and trying to repurchase them for cheaper. Time frames can be from hours to months. Investing means you are holding it and adding it for the long term and sell it slowly in the far future or sell it altogether. Let me show you both concepts, and please don't skip this part because the 1.6 million yearly is based on this concept I will explain. So no shortcuts here. I think 1.6 million per year should be worth a couple more minutes of your time. Let's have a look at the optimal trading scenario. You are a full-time trader and you are good at what you do. Each year you make some profits, which are the total of the green and yellow part. The green part of your profit is used for your personal consumption, and the yellow part is the part you put into your capital each year. So you are trading with more and more capital, so your earnings are growing. For this scenario to work, you have to determine how much percent of your earnings should go into your consumptions and how much should be reinvested into your capital. If you have the discipline to make it work, then your trading career will grow over time. But let me show you the structure of how you make money. You are trading, then you get tax, then you consume, and you reinvest the leftover. Then you might lose or you make a profit. This structure is fine, but this structure is a structure of someone who is the primary income source. The income source is being a trader. This is the same as going to work. Someone who is going to work in a different job will have the same structure. If you are happy being a trader, then this is fine. But keep watching because this will catapult your wealth. I don't want my viewers and subscribers only have one income source, and I don't want my viewers to be the driving force of the income. You can agree with me that the income source of a long-term investment is the invested and compounding money. The income source of a trader are the trades. The trades will cost you time to manage, so you are working for that money. I want you to use the profit of your investment to build other streams of income. This can be in a business, in real estate, or rental properties, more stocks, cryptocurrencies, and other income streams. In the end, it will look like this. You will expand and diversify your stream of income, and in most cases, consume first before you get taxed. I talk about the structure in detail in this video. I will link up here and in the description below. If you are interested in building this structure and retire early, please watch it after this video. Let me show you the more realistic scenario which happens to most of the traders. The first year might work as planned when the trader has some skill. So he used some for his consumption, which is marked in green, and some for capital growth, which is in yellow. In 2021, however, the trader spent all his generated profit for his consumption. So his capital growth stagnates in 2022. In 2022, the trader even earned less because of a lack of discipline in working regularly or just having a bad year. But consumption is relatively high. After all, the trader is used to consume more after 2 years of successful trading. You guys might know, no one likes to downgrade. So in 2023, there is a capital loss, which is red, because the trader used the capital to maintain the lifestyle he is used to. In 2024, the trader finally wakes up, learns more about trading, starts to work regularly, cuts down the consumption, makes good profit, and uses a big part of the profit as the capital. In 2025, the trader hit his personal ceiling and maybe also the market ceiling. A personal ceiling might be a point in time where a trader feels comfortable. He earns the right amount to maintain the lifestyle he wants to live. Every one of us has a personal ceiling. It can also be limited by knowledge, working ethic, and the mindset of each trader. So everyone will eventually reach a cap where the trader does not want to move further. There are also market ceilings, but I don't want to talk about it now because we still need to get to the 1.6 million per year. From this little example, I could explain that trading stocks can be difficult because so many things can go wrong. Often it's not the stock itself, but the investor or trader. There can be 100 traders and investors buying the same stock at the same time, but we will have 100 different results. It's not the investment that are making money, it's the investor. Most people care about what stocks to buy, but they don't care about the knowledge and mindset they need to have. This is why I also try to improve my viewers and subscribers' awareness to improve their financial mindset. So please, for all the ones who did not subscribe or share the video yet, please do it now if you think that I deserve it. If not, let me share you how you can make 1.6 million per year and more with Nio or Xpeng, and you might reconsider. Very quick. I have written down the rate of return of the Amazon stock of the last 23 years. The average return was 37% per year. It's also covered the dot-com bubble and the 2008 recession. If you think a return rate of 37% is too high, then let me show you another stock. Home Depot. Home Depot has an average return per year of 18%. So if we can agree that Nio, Xpeng, or any other stock you have in mind can have a return rate of 25% annually, then let us put this into the calculator. Oh, by the way, Tesla had over 123%, but I try to be conservative and give you stocks which had more history and survived a crash and a recession. Let's get back to our calculation. We are putting a 25% annual average return rate in for 30 years with a starting amount of 10,000. This is the amount that most full-time traders have because traders should start with around 30,000 in capital. If you don't have this much, don't be discouraged. Let me show you this really quick before we move on. We can agree that Nio or Xpeng will actually most likely see a return of 50% in the next 3 years, if not even more. They will grow insanely, and if you just invested $1,000 today in Nio or Xpeng and add $100 per month, you will get to $10,285 after 3 years. So that you will end up at the same scenario. So let's go back to our scenario. 25% average yearly return, starting amount of 10,000, we will have 8,077,000 after 30 years. You might be disappointed now that it takes you 30 years to get here, but wait a minute. There are more things I have to show you. You see, in year 30 you are making 1.6 million in interest every year. And this would be every year because you have 6.4 million in the bank account. The most insane fact is that your initial investment was only 10,000. Another insane fact is it takes you 30 years. But why are there so few people who are multimillionaires? Reason is many people are hitting their personal ceiling way before. Many people will cash out in, let's say, year 7. They use the 47k to buy a car and they are happy that the investment was only 10,000. Or they use the 9,500 to make a vacation. They are capping out and taking the profit. Let me show you a couple more scenarios so you know what lays ahead of you. If you invest 10,000 in a stock each year for the next 30 years, you will have 30 stocks which have matured in different stages. The first stock you bought was invested 30 years. The second stock you bought is invested 29 years, and so on and so on. So you would retire with the following. You will have a total of 30 stocks generating 8 million in interest per year. And you would have an ending balance of 40 million. And you would have just invested 300,000 over a lifetime of 30 years. This is less than many people pay in a mortgage in a lifetime of the property. This is why I always advise buying a rental property first before buying yourself a house. But this is another topic. I know most humans can't stick to a plan for 30 years, I included. So let us look at 10 years. We see 83,000 per year in interest, which is an amount that most people can retire comfortably with. 100,000 invested over the 10 years is possible. We all know that most of us change and pay for cars, which exceeds 100,000 in 10 years. Let's have a quick look at 20 years. We see 857,000 in yearly income and 4.2 million in asset. This, I think, is a sweet spot for many people. It's definitely one for me, and I'm working on achieving this sweet spot. So I hope that I could show you that long-term investments beat trading in the long term. Trades can generate more cash at the beginning, but there are challenges, and endless growth with trades are more difficult than compounding interest. Let me show you one more thing. In long-term investment, you can see the rewarding part is at the end. The longer you can wait, the bigger the returns. You see how the yellow part is getting bigger and bigger. This is the compounding interest and compounding profit. This gives you a parabolic earning opportunity. If you are a trader, you are always scooping up your profit, and if everything works well, it will be a linear graph, but most likely it will look more like this, where you can find the sweet spot and continue to work as a trader. Even if you can make the impossible as a trader, there will still be a market ceiling which is limiting you. For the long-term investors, there is no ceiling, because even after death the investment is compounding. A significant advantage of long-term investors is that investors can fully retire and sell a small amount of their stock portfolio over time while the stock value and prices are still rising. Not to mention the tax benefits, but this can be a topic in another video. Anyway, this was a gigantic video. I hope you could learn something, and if you did, please subscribe and share the video. This will help me to grow. If you have questions, leave them in the comments below. I want all my viewers and subscribers to understand the power of investment and especially long-term investments. At this point, I have to say for legal reason that I'm not a financial advisor or CPA. I'm just a guy on YouTube. Do your own due diligence and remember that your money is your responsibility. And please subscribe to my channel if you enjoyed watching this video. Please also share it with your loved ones because you don't wanna be rich alone, and check out my other videos on my channel. Many thanks. See you hopefully in the next video. Thank you so much. See you in the next video. Thank you. Bye.